Hey everybody, it's me, Dan Sexton with Compass Real Estate, Mr. Excitement, and in this session we're going to talk about the market conditions. That's correct, the market. I'm going to cover three areas: the housing market, the rental market, and the mortgage market. All three of those are very important when you're trying to buy a house. A few years ago, as you know, the housing market was the big talk of town. All the ups and downs, the multiple offers and all that stuff. Well, nowadays, it's the mortgage market that's getting most of the press. When will interest rates drop? When, how far will they go down? Will they ever go down? We've seen a steep climb over the last couple of years ever since COVID ended and we started throwing a lot of money into the market out there. The economy went crazy. Interest rates went up everywhere, so we're going to talk about that. So let's get started. Let's start with the housing market. Okay, so let's talk about the market, starting with the housing market. This is a chart I use quite a bit. You've seen it probably in my previous videos, but this is from data from the MLS as of January of 2025. It's showing right now that the median sales price is $390,000. So the market hasn't moved a whole lot from last year, as you notice down on the bottom down here. The last year the average median sales price was $385,000. So we haven't seen much of an increase, not like we did a few years ago. So we've only increased 1% over last year. The big number that I think is really telling is the number of active listings currently at 24,382. That's up 30% over this time last year. So the reasons for that could be just not a lot of buyers out there right now due to the interest rates. It could be new construction out there. It's hard to tell why we're all of a sudden seeing that many active listings. The other thing is months supply of inventory is at 3.4. Again, it's a number that hasn't really changed a whole lot. It's still a seller's market. A balanced market is in that 5 to 6 months time frame. So, and as you can see, our 390,000, 24,000 available homes. So, there are homes out there to be purchased. We're seeing dips like we normally do. So anyway, now let's move on to the rental market. Okay, so on the rental market, what I did is I figured that most people that are kind of trying to choose between, we're going to rent, we're going to buy, they're typically looking for something more than a one bedroom. So I'm looking primarily just at what is the average 2-bedroom rental going for out there. And I did it for 4 different categories. I did it for an apartment, a house, a townhome, and a condo. So in this chart here, you're going to see that the average apartment, 2-bedroom apartment's around $1,857 for just over 1,000 square feet, where in a house is $2,381 for about 1,200 square feet. So the rental market's kind of stayed pretty steady. Some articles out there saying actually the market rents have fallen a little bit. The Dallas average rent for everything right now, all sizes and stuff, is about $1,400 a month, whereas the national average is $1,550. So we're still under the national average, and rents, are kind of staying again somewhat steady. Some articles I've read say that the rents are actually dropping a little bit. I really haven't seen it yet, but I'm not out there in the rental market. So anyway, let's go on now to the mortgage chart and talk about mortgage rates. Okay, so let's talk about the current mortgage market and interest rates and stuff like this. Here's a chart. You can see, interest rates starting a year and a half ago, they shot up when the end of COVID, and all the money was dumped into the economy. The interest rates shot up to in the sevens. They pretty much have been staying in the 7s. Now we did recently have a little bit of a drop. You can see by the chart it dropped a little bit last year, and then they rose back up, and then it looks like they're coming down again. I'm hoping that they will continue to trend downward. But these higher interest rates, I think, is having an impact on the market, probably more so than any other thing. Interest rates being this high, buyers are holding off, which is a mistake, and I'll talk about that in a second. And sellers are holding off selling because they are probably either refinanced, or when they bought, interest rates were at the 3.5%. So for them to now go buy another house, they're going to pay the inflated housing price on top of, then we'll have a 6.8% interest rate. So it just right now doesn't make economic sense for them to do so. So they're holding off on putting their home on the market. One of the things, though, on the buy side, there are mechanisms that lenders use to hopefully get you in a cheaper interest rate. You can do a buy down. You can have the seller right now with as many homes as there are on the market. Sellers are willing to contribute to buyer's concessions, seller concessions towards the buyer to help them buy down their interest rate. A lot of new programs out there to try to drop the interest rate. Plus, a lot of new construction right now are offering some really great rates compared to what the market is. I've seen one of the major home builders around here offering 5%, which is that's almost 2 points lower. So and over here in the right below me is a sample payment program, just to show you what I took an average house in Carrollton, which sells for around an average of $440,000, and you put a 6.8% mortgage on that. Or interest rate on that, it comes to a $2,800 a month payment, principal and interest. Now you tack your insurance on that and your taxes, you're going to bump your payment up more. So, and insurance right now is one of the biggest culprits of driving problems within the housing market. Insurance has gotten a little out of control. Hopefully insurance rates will come down, but who knows what's going to happen there. So anyway, that's kind of the mortgage market. We covered the housing, we've covered the rental, and now the mortgage. Let's go on to the next section.